Well, hello, Damon. Thank you so much for joining me today. Guys, this is a very informal video that Damon and I decided to do just as we are talking through some of our client files that we are working on together. Of course, me on the credit restoration side, and then Damon being the lender. And so, for you all who don't know, Damon Sorrell is a loan officer with Top Choice Lending, and I'm Muncie Hawkins, the founder of Fig Restoration, a credit consulting firm. So, Damon, I know we talk
Hey,
all the time. So, how are you today?
everything's good. Had a great weekend with the family, the grandkids for Easter. So, they ran me like crazy, but we enjoyed ourselves.
Good, good. So, tell them how long you've been in the business because I just want to make sure that I qualify your experience so that way they
Mm,
don't think we're just blowing hot air up there
Gotcha.
behinds.
Well, June of this year will make 9 years that I've been in the industry, and I've seen quite a few things. Now, have I seen everything? No, because there's always new scenarios that come out. But I've been in the business 9 years, and seen a lot of different scenarios, good and bad. So, what we try to do is learn from the bad experiences so that clients don't suffer from either their own mistakes or even a lender's mistakes from not seeing something and or not knowing the guidelines. So I try to make sure I study the guidelines and then know how to ask the appropriate questions because clients don't know what they don't know.
Right.
So, we just kind of go from there.
And that's so important. And one of the things that I really like, and I work with several different loan officers, and I think that each of you have such value to add. And one of the things about us is we've worked together for so long. Fig will be in business 7 years this year in June, and we can have those real conversations because
Yes.
sometimes it gets tough. Sometimes, we are so excited. Sometimes we're upset. When you are deciding to help these clients, we go on a journey with them. And
Yeah.
because I know you care and I care, sometimes that frustration steps in when we can't just get them to where we want them to be in super fast time, right? But
Yes.
everybody comes with a different set of issues. As we know, when they're coming to me for credit, we know there's going to be some problems, right? So I thank you for allowing me to, number one, vent to you because it's not just venting just to be venting on purpose. It is for educational
Yeah.
insights as well. You have anything you want to add about that? I saw you giggling so hard before I go into this question I want to ask you.
Well, you and I, we vent to one another all the time because we know a lot of times we see different situations. Sometimes it could be miscommunication or misunderstanding from the client's perspective, or even they may not be able to interpret what we're trying to, the information we're trying to give them. And so sometimes getting them on the same page, or sometimes let's just be honest, we have clients that think that they can beat the system. And so, we laugh about them because we know, like, listen, you're not beating $1 trillion system. You're not beating them. So let's not waste each other's time. Let's do this the right way because we know there's some repercussions and consequences that they don't know that can really hurt them. And it's not just a slap on the wrist. We're talking major jail time and a fine when we're talking about mortgage fraud. And so we just want to, because sometimes people want a house so bad that they're willing to do anything to get it. And we don't want you to do anything to get it. We just want you to be willing to work through the process to get to the goal so we can get you there so that you can get approved and doing it the right way. Because really,
Absolutely.
there are no shortcuts.
Absolutely. That is, thank you for saying that. I don't have to say it because I say it 10,000 times a day. There are no shortcuts. So, what I wanted to talk about today is just navigating credit and mortgage approvals through payment history. One thing that I've seen is a major uptick in the amount of late payments that I'm seeing on credit reports. Now, when I see those late payments, it's always leading me to believe, what's the financial stability? Do these people just not know how to properly pay their bills? It could be several different things. But I know that the greatest impact of those late payment history marks can cause a credit score to drop up to 100 points. And
Yes.
so for me, it's really crucial on the credit side to make sure that these clients are not missing these payments, and then trying my best to help them to have some of them removed. Now, we know some can be removed and some cannot be removed. But from a mortgage perspective, because like I said, this is definitely has been a season of an uptick where we're seeing so many late payments. How does the payment history directly impact mortgage loan approvals, and why is it more critical now than ever from your perspective as a lender?
So from a lender's perspective, some people think it is a loan officer's personal decision to approve or not approve a loan. And that is totally false. We use an automated underwriting system that basically we enter the information in, and it lets us know based on looking at the credit report, on-time payments, late payments, if they will say yes. So from a mortgage perspective, these late payments puts them in a negative situation to where most likely 99.9% of the time they will not get approved. Now, let's say they have one late pay on a credit card. You could probably scapegoat that. You could probably work around that. But if they have late payments on, number one, if you have a late pay on a mortgage and you're trying to refinance or purchase another mortgage, it's going to kill your loan. It's because you can't have any late pays within the last past 12 months for government loans. For conventional loans, they're way more stricter. You can't have any late pays within 24 months. So for, let's say, a person that they lost their job or they're no longer getting bonuses or overtime, and so now it's severely impacted their budget. So now they can no longer pay their bills on time, and now they want to refinance. Unfortunately, you won't be able to refinance because of those late pays. Number one, it drops the credit score all the way down. Like you say, 50 to 100 points. Number two, the system automatically is going to say caution or refer because of those late payments. So you want to get those things in order before applying for a mortgage. If you feel like that your budget is getting ready to change and that you might start to head this direction, that's when you want to try to refinance, or you want to try to downsize on, let's say you had a $3,000 mortgage and your pay is severely decreased. Okay, you do need to go ahead and sell that house and downsize. You can't wait till you have that late payments, because two things happen. Once you know that, hey, I can no longer afford to pay this mortgage and you're going into foreclosure, there's no option for refinance. If you wait too long, the bank is going to foreclose on the property. Then you have no ability to sell the property to use that profit to move to an apartment. It's going to be taken away from you. So you have to be very proactive and put all pride and ego aside, because we all have been through it. I've been through it in the past. I've had before I got into the mortgage industry, I had a bankruptcy.
Right.
So I know how it feels when things just
Have to
go in the
wait.
wrong direction.
Yeah. Yeah. You talked about they don't like to see those late payments within the past 12 months, and then some don't even want to see it within 24 months. But what if the client has a 720 credit score and they do have late payments within the past year? Will they let them in because their score is high, or do they still have to, follow those same guidelines with the no payment, no late
Well,
payments?
that is a great question.
Mhm.
The credit score is only to determine the interest rate and sometimes the minimum requirement for the program. The late pays still will make him say no.
So
So
it's all
even
about that. So you're saying it's all about the credit profile, because that profile is really showing at the risk that you may be as a lender. And if they see those things in the credit profile, that's a red flag.
correct. And it's not like you say where I can manually override it. there's an automatic underwriting system that will automatically review all these things, and it'll shut it down. When it says for like government loans, if it says refer, that means it's a manual underwrite. That means an underwriter has to make a personal decision outside of the automatic underwriting system on, does this file, is it approvable? And then they still have a set of guidelines they got to go by. One of those guidelines is you cannot have any late pays within that last 12 months. So it automatically just kills the whole deal.
Okay. Now, one more question, because, and I'm just asking because, we get all kind of questions and we have people saying, why can't you do this? Or why can't you do this? What about if you were putting more cash down? Will that impact whether or not that loan can be closed if you have late payments?
Unfortunately, no.
Okay.
So the amount of cash you're putting into the process has nothing to do with it. It's all about that credit profile. That credit profile has to be clean. You look at it from a perspective of, you're asking a new lender to loan you some money to purchase a property, but your previous creditors, you didn't keep your promise with them and you didn't pay them on time. And for some people, they think, well, I'm paying them. It might be slow, but I'm paying them. That's an absolute no-no.
Right.
They want to be paid on time. So that credit profile, when they see that, hey, these previous creditors that granted you the access to these finances, you didn't keep up with the terms. So in place, they're thinking, well, you're not going to do the same with us.
Right. That is so good. One thing that I do see is that between the mortgage industry and the business funding industry, those are two industries that grade the hardest. It's not like going get a car. It's not like going
Mhm.
get a credit card. None of that. These lenders are really making sure that you are capable of repaying this loan, and they do take all of that information in the credit profile very seriously. So you honestly, even though we haven't been talking that long, you have really given some good information that I know will be able to help these individuals as they are either thinking about purchasing a home, or as they are, thinking about getting their credit fixed, or as they are just, wondering what steps should I take. Number one, we've learned that you cannot have any late payments within the past year. So that's the first thing. Start paying all of your bills on time. That's going to be the first thing, is 35% of your credit score. So if you don't do anything else, make sure you are paying your bills on time to begin. Is there anything else you want to add? Because we're going to wrap up in probably the next couple of minutes. So is there anything else you want to add to this conversation, Damon?
Based on what you just said about business funding and mortgage grade the hardest. So that makes a lot of sense from a perspective, from a client's perspective. They've never experienced this type of lending. They're most of the time their experience is from auto financing. So with auto financing, you can have late pays and you put more money down. Yeah, they'll grant you that loan on that car. And so that kind of explains why they feel like, well, why can't I just do this? Is because of that. But the main thing from a mortgage perspective is, when they look at that credit report, and if you have late pays, there is a money management issue, because who wouldn't want to pay their bills on time? So if there's a money management issue, you most likely are not going to get your loan granted, because you're already having an issue with the amount of money you have now, and now you're wanting to increase your budget, which is almost like an oxymoron.
Right, right.
So
That's
the,
really important. And I think even from that, can you just speak about from, because my clients are going to come from lenders, my clients are going to come from realtors. And especially with the realtors, their clients will tell them pretty much anything sometimes. And of course, realtors, they're trying to get their commissions. They want these closed really quickly. But what is it that you can add to just kind of educate realtors a little bit more on their clients' overall financial stability when they accept them as a client and as they get ready to move forward? Because sometimes realtors will want them to close or to hurry up with the credit process and the lending process. They want the clear to close. But sometimes I feel that they don't understand all of the dynamics from a financial standpoint. So do you see that on your end as I'm seeing it on my end?
Yes. So this is, well, I'm getting ready to rub some
Keep it
people the wrong
real.
way. I have to be honest. So I'm not saying all realtors.
No, of
Let's
course
just
not.
say some realtors. If they have not received a commission in a while, they're speaking from a, it's almost from a survival perspective. So they need this to close. So sometimes common sense and comprehension goes to the bottom of the priority list. So I don't know if education can necessarily help in that situation. It's more of what is their situation, because how do they know more than what we know? And when I say it from that perspective of, we're looking at the credit profile, we know the guidelines, you know the guidelines for credit law, I know the guidelines for mortgage law, but they seem to like, well, you should be able to do this. No, you can't say that. You can't even tell the client that,
Right.
because they're going from an optimistic standpoint. I get it, but we have to deal in realism. As I look at their credit profile and I look at their income and I say, hey, their income is $5,000 a month gross. They want a $2,500 mortgage payment.
Not
It will
gonna
not
work.
be granted to them. So we got to use some common sense and realism as they get that information and say, you and the buyer have to now reduce the budget. You can no longer look at this $300,000 home. I know they want to be in Cy-Fair School District. I know they want their kids here and there. But if your budget doesn't allow it, we have to now adjust, because we can't make it just poof, pop up out the air and we're just going to make it happen. It doesn't work that way.
Right.
So, and it's the same with credit, whereas we've heard realtors tell clients, oh, it should only take a few months to get your credit in order. No, you don't know that, because a credit profile is like DNA. It's one of a kind. So they can't compare buyer A's credit profile to buyer B's, because their money management and their financial decisions are totally different. When they started what you call like credit aging, when
Mm-hmm.
they started their credit profile. So they get to assuming and putting information out there, which actually makes our jobs harder,
Mm-hmm.
because now they're getting these, when we tell them, hey, it's going to take this long to get you there, or we need we need you to do XYZ. Now they're frustrated.
Mm-hmm.
It's because they've been given a false reality by a party that has
No
no
idea of what their financial stability is. And
no
so,
licenses, no, they
no,
have no license, possibly not even would say experience
right,
on this level of knowing what's in their profile to say what they can do.
right,
And so that's where hoping that we can get realtors to trust everybody to do their job well. We know our
right,
job, just
right,
like we don't try to go and do their job.
right,
Let us do our job and trust in our professional experience and know how to get it done.
right. Oh, that is so good. Teamwork makes the dream work. When everybody
Absolutely.
is operating at the highest level in their own lane, it's going to come together and then everybody wins. I know some things about the mortgage industry, but I'm not about to talk to my clients about the mortgage industry. And you better not start talking to my
You
clients about
know I
their credit
don't.
because you already know. No, I'm
Yeah,
just playing, but yeah.
I send
Uh,
them directly to saying like, listen, this is the credit analyst. So, and I always tell them, I'm not licensing credit, so I can't answer any questions on how long it's going to take to get their credit score up and what it's going to take. I always tell them, you got to go to the professional and allow them to do the work with you. And then they got to be willing to follow the plan that you gave them.
right. Right. Absolutely. And we do work hand in hand. I joke when I say don't tell my clients anything about their credit, because at the end of the day, you all are the ones that's going to make the final decision on whether they get this approval. So of course, even when I think I have a file, or I'm sorry, even when I know I have a file that's together, I'm still going to say, hey, final looks, what do you think? Let us know if there's anything else. Do we need to go back to the table? Because I respect your authority in the area that you operate. So this was a good conversation, and like I said, I didn't want this to be formal. I just wanted this to be a conversation where individuals could have access to some, behind the scenes information
Yes.
that we discuss, because it does affect the big picture. And I believe that everybody can be educated. I
Yeah.
honestly
Okay.
do. Some people may not want to be, but for those who want to, yes, they can be
Yes.
educated. And the more you're educated, the better success you will have, not only in your business, but your clients will have better success too. And we already know
Yes.
what happens when our clients are having success. They send
Yes.
us more individuals,
They
right?
send us more business.
So thank you, Damon, so much for taking the time out. I know you were busy, but we needed to get this done, and hopefully we can have more sessions like this to where we're just, jumping on, talking about something that may be, a pain point for us. That way, the community understands, our partners understand, and we all could just work together in order for everyone to have that success.
Absolutely. I appreciate you just well, us putting this information out because
Yeah,
we have these conversations all the time. And the last thing I want people to know is that we are passionate about what we do because we truly do care
yeah,
that we want to see people accomplish their goals and we're empathetic for them. But at the end of the day, there is no charity. They have to understand there is no charity involved. So they gotta follow through the things if they really want to get this done. We'll be there with them, holding their hand through the whole process.
right. They have to trust the process. So tell them where they can contact you at and how to reach you and all that good stuff.
If you would like more information about mortgage lending, I would love to be your loan officer and help you through the whole process. You can reach me at 832-956-6000. If you would like to apply, you can go to www.damonsorrell.com, and that's the application online. And I'll be glad to go through your credit report and your financials with you and give you a game plan.
Awesome, awesome. And again, my name is Monty Hawkins. I can be reached at figrestoration.com, and you can find me on all social media platforms at Fig Restoration if you are seeking assistance with your credit and you are serious about trusting the process. Thank you again, Damon, and until next time.